Good morning, Forex traders. Today I would like to discuss the HMA, the Hall Moving Average Indicator, which is this right here, and how I use it for trading off the weekly charts. So this might be a little different than you're used to, but this is the easiest, most low stress way of trading, but it does have a little bit of a downfall to it. I'll cover that later, but this is basically how you do it. At the end of the week, you look at these bars right here change colors during the during the candle. So for example, this right here, this green, could be fluctuating between green and red during the week. It does not paint and stay the same color until the candle closes, which is at the end of the week. So this is how you would trade this, and of course it's not perfect like anything else. There's nothing perfect. So let me pick just any pair. I think I did this right here. So the way I do it, let me do this so you can be clear. So let's say, well, this is a good run right here, but I'm not going to cherry pick. So anyways, so at the close of this candle, which is it's a weekly candle, so you got to have a lot of patience to trade this actually. So you would short here, and you wouldn't close that position until the candle turns green. So in this case here, there would have been a loss. However, I'll show you how to avoid this. So this would have been let's call 130 pip loss. So what you can do is, as soon as the so after 1 week it was up as much as 150 but closed with 69 pip gain. So what you could do is move the stop loss to take profit at 50. So in this case you would have been stopped out at 50 pips gain. And then here you would be gaining, you'll be entering a long right here, and you would exit at this close of this red candle. So that would have been 380 pips gain. And but this, takes a lot of patience, because that's 1, 2, 3. So that's after 14 weeks, 15 weeks. So this is not, nothing is getting quick rich here. Nothing. Forget about the idea if you think you're going to make millions overnight. Anyways, so here turns red. So you switch from going long to going short. And again, you can lock in your profit too. As soon as it gets into 50 pips, you can lock in your gains. So this one, you might have been stopped out, because if you put $50 gain, so what I usually like to do is, if this is at the end of this week here, I'm up 75 pips, I can move it to, you can do the half method, meaning I would put my stop loss at 35 pips, so right here, and then this candle would have taken you out. Or if you just want to move your stop loss to break even, that's good too. So it's a give and take, plus or minuses. So if you want to conserve your gains, you can do 50 pips and then get stopped out, or you can just, if you want a chance gaining more pips, then you move the stop loss at break even, and then you would have caught all this run. Anyways, this one here would have been a short. I'll have a link at the description how you can get this indicator. And this one would have taken you out right here, at this line. So you would have entered here short and gotten out at the close of this candle. 565 pips in 18 weeks. So that's a little bit over 4 months, but that's average about 100 pips a month. So you can do this on different pairs. If you do it on 10 pairs and they average 100 pips a month, then you'll have 1,000 pips. So here's how it would have turned out on a USD JPY. As far as lower time frames, you can a lot of people try to trade the daily, so let's see what happens if you do it on the daily. On the daily, there's a lot of chopping around for this indicator because this indicator tends to turn a little bit later. So I mean, here you would have, so I strictly use this on a weekly. So here you would have gone in here and out here. So out here and here. And then you would have gotten some losses as well. So for example, let me see, find if this thing can lose. So you would have shorted here and gotten out here. So that would have been a loss unless you had a 50 pip stop loss. So that's why I like this on the weekly. So I'll just do one more example. I think you get the picture here. So you entered here on the close of this candle. You shorted here, and then you went back and you closed your short right here. So from this candle to this candle, I think it was 2 candles over. So this one, 400 pips in 20 weeks. So like I said, this takes a lot of time, and you can't be checking it every day, just once a week. Hope this helps. If you have any questions, email me or comment below. Thank you.